China is turning its back on foreign investors, and it's not a glitch in the system. It's intentional. This could be the biggest economic shakeup of the decade, and the whole world is feeling the ripple effects. Foreign investments helped China grow into the world's second largest economy, but now things are changing. The question is, why? Is China really ready to close its doors to the very capital that helped build its empire? Or is there a deeper strategy at play, one that could shift the balance of global power for good? Get ready to uncover the surprising truth behind China's sudden cold shoulder to foreign investors and why this matters more than you think. For investors, businesses, and anyone interested in global economics, understanding what's happening in China right now is crucial. China has been a land of opportunity, a place where businesses found a massive market, cheap labor, and unprecedented growth. But what happens when that door starts closing? This shift doesn't just affect China, it affects you, your investments, your business decisions, and even the products you use every day. If you want to stay ahead, whether you're an investor looking for the next big move or simply curious about the forces that shape our globalized world, you need to understand why China is taking this dramatic turn. What are the ripple effects of this decision, and where should you turn your attention next? Because in a world where China's stance on foreign investments can rewrite economic rules, knowing the why could be the key to staying ahead. So, why would China push away the very investors that helped turn it into an economic powerhouse? It seems like a paradox. After decades of welcoming foreign money with open arms, now China seems intent on shutting the door. What's driving the shift? Well, the reasons are not as straightforward as you might think. Some say it's all about security, protecting data, technology in China's strategic sectors. Others argue it's a response to rising geopolitical tensions, a strategic move to reduce dependence on the West. But there's more, much more. A story that involves control, independence, and an attempt to reshape global economic dynamics. This is about China wanting to grow its way without the strings attached. Because we're about to deep dive into why China is making this bold move, how it's changing the rules of global trade, and what it could mean to the rest of the world. Our story begins in the 1980s, a time when China was just opening up to the world. Back then, foreign investment wasn't just welcomed, it was desperately needed. Under the leadership of Deng Xiaoping, China launched its open door policy. The goal was simple: attract foreign capital, technology, and knowledge to build an economy that could stand on the world stage. Foreign companies flooded in, bringing not just money but expertise that China used to build its manufacturing base. And it worked. China became the factory of the world, producing everything from toys to electronics at an unmatched scale and cost. This golden era of foreign investments transformed China. Over the next 4 decades, it grew into the world's second largest economy, with foreign businesses reaping the rewards of a massive consumer market. But something started to change in recent years. China's leaders began talking about security, economic security, data security, and even ideological security. Foreign influence, once seen as a tool for growth, started being viewed as a vulnerability. With increasing geopolitical tensions, especially between China and the United States, Beijing began tightening its grip. The tech crackdown on companies like Alibaba and the education sector reforms weren't just aimed at regulating industries. They sent a clear message: China wants control, not just growth. This shift also reflects a broader strategy: the dual circulation policy. China aims to reduce its dependence on foreign markets and investments by focusing on its internal economy. It wants to innovate, produce, and grow on its own terms without relying on outsiders. China's leaders envision an economy driven by domestic innovation and consumption, a model that moves the country up the value chain, focusing on advanced manufacturing, AI, and self-reliance. As China redefines its relationship with foreign capital, many investors are scaling back, looking for opportunities elsewhere like Vietnam, India, and other emerging markets. The message is clear. China's priorities have shifted, and the global economy is feeling the impact. The new era of economic nationalism in China is about more than just keeping foreign investors at bay. It's about rewriting the rules of global engagement with China firmly in the driver's seat. So, what does this mean? Why does China's move away from foreign investment to matter you and to the rest of the world? For foreign investors, the golden age of easy profit in China is over. Many companies that thrived on China's open doors are now facing regulatory crackdowns, rising costs, and a clear message from Beijing. We want less of you. As a result, they're packing their bags and moving to new frontiers, places like India, Vietnam, and even parts of Africa. The shift is already reshaping global supply chains, with emerging markets seeing new investments in the hopes of becoming the next big destination for global capital. But there's more to it. China's pivot towards self-reliance and internal consumption changes the balance of global power. The world's dependence on China for cheap goods is being challenged. We may soon see rising costs, supply disruptions, and a recalibration of how the world economy works. For China, this is about securing its future, building industries, developing technology, and thriving without relying on anyone else. It's about being strong enough to stand on its own in an uncertain global environment. But the question remains, can China achieve this kind of independence without losing its growth momentum? Will cutting off foreign investments truly make China stronger, or will it isolate the country from the very global network that once helped it rise? The truth is, China's strategy is bold. It's a gamble that could either solidify its place as a self-sufficient global power or cause it to lose its edge in a world that thrives on interconnection. The rest of us can only watch as this new chapter unfolds and decide how we adapt. So what do you think about China's decision? Is it a smart move towards a self-reliant future, or is it isolating itself at the wrong time? Let us know your thoughts in the comments below. If you found this video insightful, please hit that like button and subscribe for more deep dives into global economics and geopolitics. Thanks for watching.